Hello and welcome to BloombergQuint. We're joined by Mrs. Ranil Salgado, who is the India mission chief for the IMF. Mrs. Salgado, now just on Tuesday, the IMF had cut sharply India's growth projections for this financial year. However, they said that in the next year, certain bottlenecks could improve, fix themselves. Just to get your views on some of the closer issues with respect to the Indian economy, what is it that is pushing this growth forecast downward, and what can be done to fix it?
Sure. So we think the slowdown primarily is cyclical in nature and reflects certain environmental and regulatory uncertainty, the slowdown in income growth, especially for rural India, and third, some issues related to the financial sector, including the non-bank financial sector. So that primarily explains the slowdown. We do believe that growth over the long term in India still should remain quite strong over the medium term, growth above 7%. And that's why we're envisioning a pickup in growth going into the next fiscal year. And as you mentioned, back up to 7% by next fiscal year. And that would be supported by the monetary policy, the policy rate cuts that the RBI has already taken. It's reduced interest rates, policy rate by 1.35% since February, as well as recent other steps the government has taken to support certain sectors, real estate, auto vehicle sales, and then finally the corporate income tax cut.
All right. Let me bring the attention to some of the more important issues as far as India's economic growth is concerned, specifically with respect to unemployment. Now, earlier this year, there was a statement, there was a report that was never made public, actually, but was leaked to the press, which pointed at India's unemployment rate at about 6.1%, which is the worst since the 70s. To get your sense of, how exactly is the job situation looking like in India now? It is one of the youngest economies in the world right now. To your mind, is there a structural issue as far as jobs are concerned?
So first, the report was released. It was released with delay. Right. So we do see a higher increase in unemployment and also a reduce in labor force participation. I think both of those are important, and especially in labor force participation among women, which we think is something that needs to be reversed going forward. The issue on India, there's an issue related to the statistics themselves, because in India, a lot of jobs are in the informal sector, and there are questions, and I think the government believes that, questions about whether that is picked up properly. But still, we think what India needs is greater formal sector job creation, particularly, as you pointed out, because India has a young and growing population and workforce. Right. And, in economists, we discuss something called the demographic dividend. That's to take advantage of your growing workforce. And India has roughly 2 to 3 decades to do that before the working age population starts to decline. Right. So this is the real time that India needs to continue to grow, at least 7, we think even stronger. So the government believes that we'll have, wants a 5 trillion economy, I think by 2023 or 2024, and that would actually require even stronger growth. So it's really important for the government to focus on structural reforms that will support formal job sector growth.
You mentioned this 5 trillion number. Now, there's been plenty of commentary of, when exactly it is that you need to shift gears and push up that growth number, because this year the growth numbers have been pretty disappointing. Plus, you have various commentaries coming in from the government itself that the finance minister only recently classified that number as challenging but achievable or realizable. To your mind, what does then the government need to do as far as reaching that 5 trillion by 2024-25?
Right. So we think there are a number of reforms that need to be done to support the economy. One is to continue work on improving the financial sector. So the government has taken a lot of steps, especially mostly towards the commercial banks, the public sector banks, in terms of recognizing bad assets, which is the first steps towards cleaning a bank's balance sheet. Second, to set up this framework, the Insolvency and Bankruptcy Code, to help resolve those assets. Third, they've, I think now in the last 3 years, 3.5 years, recapitalized the banks by over 3 trillion rupees. So those are key things that have to be taken. The next step is to improve the governance of public sector banks. We still see recurring problems, and our concern is unless you improve the overall governance of the banks sufficiently, that you could have recurring problems. Now, the government is trying that. They've taken steps in terms of improving the governance. We think more can be done there. Sure. Second is we also think the government can think about gradually easing its position in public sector banks. So either reducing its stakeholding of them or even perhaps disinvesting somewhat its stakes in public sector banks.
Okay, so now this point has been repeatedly mentioned at various forums over the last few days at this annual meeting. Privatization, aggressive privatization of public sector banking system. With respect to the current state of those banks, apart from the privatization part of it, what can be done to sort of improve? Because things tend to get slowed down whenever you talk about privatization of these public sector banks. And it's expected that the public sector banks serve a certain purpose and therefore they need to be controlled by the government. So apart from that, apart from the disinvestment, structurally, what can be fixed with the banks?
So the broad picture is to make them more like commercial private commercial banks. So that includes improving their operations, the efficiency of their operations, but more than that, also improving practices related to risk management and how they give out loans to make sure those loans, I mean, of course, there's certain areas that the government wants to prioritize. The government has priority sector lending, but beyond that, that could also be a little bit adjusted. Right. But beyond that, it is more to make sure the rest of the loans are properly examined and given out on a commercial basis. That's the general idea. There also may be issues related to properly incentivizing bank officers as well as bank management.
Right. Okay. Now, let me shift it a little to the macro issues. Now, there's been one issue that's been talked about a lot with respect to the quality or the sanctity of the macroeconomic data that comes out from the government, and to what extent does that show the true picture of the economy? What are your thoughts?
So, we've heard this discussion and we asked a lot about it. So we've actually had some of our statistical experts look at Indian national accounts data, meaning the GDP data. And generally they find, although there are issues, and I can discuss a few of those, generally they find for an emerging market, India is not bad. Okay. There are areas it needs to improve, but relative to other emerging markets, it is not bad. And what we fairly confident are is we don't think there's a systematic bias in the numbers. So a given number in a given year may not be quite accurate, and there are reasons and some technical reasons for that. But in general, we don't believe they are systematically incorrect or biased in one direction.
Okay. But then you said that there are certain issues that you could discuss if you could throw some light on that.
So some of the ones are the ones already discussed. So there are some concerns about how the price indices used to construct the national accounts are constructed in India. Mm-hmm. India is taking steps on that, improving the price indices. They're hoping to have a producer price index, which will help. So there are steps being taken in that direction. That's clearly an area where there can be improvement. India is not bad in terms of measuring its informal sectors, but that could also be an area where more work is done to get direct measures of the informal sector. Okay. Right now, they're proxied with the formal sector measures.
Okay, fair enough. Now, we've discussed the job side of the situation and the informal and formal sector of employment. In terms of wage growth, there again, specifically towards the rural wage growth side, there have been concerns about that slowing down, and thereby that creating further effect for a number of companies that depend on those economies. To your mind, what is the core issue there? Why is it dropping, and what could be done then to fix it?
So essentially, it's the main reason we think that is driving relatively weak rural income growth is that food prices have been relatively weak. Mm-hmm. So for farmers, agricultural sector, even indirectly those linked to farmers, when the prices they're getting are lower than other prices, that has an impact on their overall growth. So that's our basic understanding of why there has been weak rural income growth. So a little bit is to find ways to support the agriculture. I mean, in the long run, more Indians have to get out of the agricultural sector, but that's more a long run. So in the short run is to support the rural worker, rural residents. And the government has taken a few steps, include PM Kisan. But we do believe it should be that. It shouldn't distort agricultural production. So there are also ways to reform the agricultural sector, such that the farmer also captures more of the income generated by agricultural production. So that's related to marketing and distribution. So there are certain agricultural reforms that also could help in terms of supporting rural income growth.
Okay, fair enough. Apart from the data side of the sanctity of data issue, there's also some concerns that have been rising rapidly over the last couple of years, is with respect to the autonomy of institutions like, say, the Reserve Bank of India. To your mind, is that something that is going to play out as far as the way the economy is going to perform in the next few years? Or do you think that some of those issues are probably overplayed?
My own personal view is they've been overplayed. The Reserve Bank of India has had some stresses vis-a-vis the government. I think a little bit was related to the dividend the RBI was providing. The recent decision by the Jalan Committee seems well-reasoned. Most of the dividend that the RBI gave was actually its current annual profits related to its operations over the past year. There was a little excess surplus capital given, but that was relatively small, and still the Reserve Bank of India remains quite well capitalized. And other issues seem to be resolving related to how our Reserve Bank of India handles the financial sector. In fact, it's been given more responsibility with now regulating the housing finance companies within the non-bank financing space. So we think the relationship has improved, and two, we don't at the moment see any reason to be concerned. We, of course, very much support the need that the Reserve Bank of India should maintain its operational independence.
Okay. Fair enough. A couple of issues with the answer that you gave that I'd like to highlight. I mean, specific topics. The first one with respect to the non-banking finance space and specifically to the housing finance space. Now, this happened only recently, the change in regulatory powers. Do you think that the RBI is probably late to the party because a number of housing finance companies are already facing a lot of stresses? They are under discussions with their lenders to restructure their businesses. Probably a little late in the day?
So clearly, stresses had risen. Well, first, it was not really housing finance; it was ILFS, right? Which is not a housing finance, but that created the liquidity problem, which helped the housing finance company issues surface. So yeah, there are concerns about the asset liability mismatches in some of the housing finance companies. As Indians are well aware, it's not really housing necessarily, but developers who are facing the stress. So this is an area where we hope both the RBI now is the regulator, but also the supervisor, which is the National Housing Bank, take a closer look at the housing finance companies and what needs to be done and help resolve the issues in those housing finance companies.
Do you think that something of an asset quality review, which happened with the banking system back in 2015, that could probably give a better understanding of the quality of assets on these books and probably could help on how they want to deal with the stress? Yeah,
we do believe that an asset quality review would work. It worked with commercial banks. I think it was very much helpful in restoring confidence for commercial banks. We understand from the RBI is doing some internal work on this, so we hope to see something in the future.
All right. Let me also throw, since you mentioned about something about the RBI dividend now, what has happened is since the RBI's dividend has shifted, but there's also been a shortfall in tax collections, and that has come out. In this scenario, how does the government's fiscal position play out for the rest of the year? Firstly, is this deficit target of 3.3% something that is achievable, and is it really that important? Is the 3.3% number that specifically important?
So I'll start by saying we're not yet sure about the 3.3. The government, the finance ministry says they still hope to achieve the target. We are seeing shortfalls. We've seen shortfalls in previous years in terms of revenues. The government usually adjusts expenditures, sometimes capital expenditures, sometimes current expenditures, to meet their target, more or less. I mean, you could argue about 1/10% of GDP, but that's more or less they've been hitting the central government target. The added complication this year is the corporate income tax cut, and we are not quite sure of the impact and whether the government will use certain waivers in the FRBM Act to increase due to a structural change. And this is a major structural change in terms of corporate taxes. So we'll have to see how that resolves. Is the 3.3 that important? Well, I think one, you have to consider the overall borrowing by Indian government, public sector. So that goes beyond just the center.
Yeah.
It also includes the states, and it also includes other public sector borrowing.
Yes.
And recently, public sector borrowing has been running even higher than it has in the past. So we think the real target is the overall public sector borrowing requirement.
You mentioned states. There again, the concern is that now states are becoming far more indebted. In effect, what kind of impact then would that have on the overall fiscal position of the country?
So, I mean, the recent data on the states are relatively positive. I think, if I'm not mistaken, the recent RBI report on state finances show that the deficits were actually lower than budgeted. So that's a good sign. As you were aware, we had several years where the states were supporting kind of the UDAI scheme, which was the electricity distribution companies. So state deficits had run a little high, but that was within the scope of the UDAI scheme. And now that it's coming off, it appears that the states have done a little better. Our concern, of course, is if further fiscal support is needed from states to the distribution companies. We'll have to see what's needed there. So generally, the picture on states seems to have improved.
On the ground, though, there are some concerns whether the UDAI scheme has actually resulted in something positive as far as these distribution companies are concerned, as far as because in effect, the states don't pass on the tariff hikes as efficiently as one would have expected under the scheme. Any concerns there?
So it's mixed. Some states are doing a better job than others. But yes, some states are not sufficiently taking the other reform steps, meaning higher tariffs or better efficiency that would make sure that the discoms remain profitable.
Sure. The last question. In an interview just in August, you'd mentioned that India is now the elephant that started running as far as the economic growth is concerned. but it's still holding that view?
So clearly it's slowing down. We hope, though, the elephant can start running again soon.
All right. Thank you so much, Mr. Salgado, for joining us on this conversation. And thank you so much for watching.